Welcome to this week's podcast on the Trade Intelligence Newsweek and what we've seen in global trade. So opportunities, we've got the greens and the ambers and the red. This is what we're using now in our trade intelligence. Opportunities, we're seeing UK, Japan, GCC and global Britain markets. Watch signals, the G7, obviously the G7's on, freight cost, CDS compliance, they're the three key areas there. And risk, again, the typical ones, origin, valuation, and classification. I'll put my teeth in and put my glasses on this morning. So let's go ahead and see, as our usual challenges with turning pages. So this week, what we're looking at obviously the UK, Japan, 18 billion investment. What does that mean? We'll go a little bit into that. The G7 supply chain security, obviously that's a key issue. Origin and customs risk, which we see most weeks now. Freight market developments. So again, what we're seeing in what's our intelligence telling us in the markets? Are we seeing any increases, decreases? Obviously, the recent agreement between the US and Iran should make some significant differences in the Strait of Hormuz. But again, that'll take a bit of time to develop. Again, global Britain, priority market, Saudi, UAE, India, Vietnam, Morocco. That's what we're seeing when we're scouring the market. And again, we're going to cover 12 signals, 5 trade corridors, 3 risk categories, and 1 data insight every week. That's what we're going to be doing. So where we're seeing the opportunities. So when we look at green, these are the opportunities. We've kind of made it a bit more simplified now. Opportunity UK Japan trade deal, obviously landmark bilateral investment, obviously in engineering, manufacturing, technology, infrastructure. Again, I don't read slides as you know, so it's but again, I'll just give you the bullet points of everything. Sector swaps, precision engineering, clear tech, digital infrastructure, financial services. So we'll keep an eye on that. I'm going to do a bit of more in-depth on Friday when we look at our trade agreements, etc., the benefits. Again, GCC investment growth, we're still seeing that. We're seeing signs there. Let us know if you're seeing the opportunities. The signs are telling us that there's a lot of good opportunities there. My experience in Saudi and the GCC countries, it's a difficult area to get. Once you're in, you're all right. It's very difficult to get into. It's very kind of blank. The UK very fast. As we know, we're very quick, fast, and probably the US it's the same. We want answers straight away. You don't get that with the GCC. So again, it's just understanding the cultural and the marketplace that it drives it, but it takes time. I mean, I'm still in many negotiations and they take a long, long time to come to fruition. And if they ever do, that's always the challenge you have. Global Britain, priority market diversification. Again, we've talked a lot about that. Department of Business and Trade, each market presents distinct entry points for UK. So what it's saying is Saudi Arabia, UAE, India, Vietnam, and Morocco. That's where they're seeing some opportunities. Morocco is a real surprise out of that. I understand Vietnam, India, yeah. Morocco. And again, we'll jump into that and find out what's the interest there. Again, Amber, what we're seeing, so G7 security check, G7 discussions plans focus on critical minerals, sourcing resilience and industrial competitiveness. Again, that's the challenge, as you know, you've only been watching. And again, I'll update you on the G7 as we go along. Critical mineral agreements, allied sourcing requirements, industrial policy shifts. So it'll be interesting there. We're seeing freight costs rising in all major routes. So again, we looked at a couple of Shanghai, Rotterdam has moved from 2.6 to 3.5. To 3.537, I've said about a 35% increase. Again, air freight from Shanghai to London has risen from 4.5 to around 6 to 7. These increases are compressing margins. So again, it has a huge challenge on the supply chain, and that's why we think the trade intelligence really works for us, because we're scouring the market and looking at these situations for you. Again, Amber, the CDS developments, again, when we talk about declaration accuracy, again, customs declaration continues to evolve with declarations, very important accuracy. I can't really enforce this or push this anymore than I can push it. Our trade intelligence can do a lot of this for you. We read the data, we can do the data for you. Engage with us. We've just done an MSS report for 2 clients. The speed now that we're starting to educate and it's really learning. It's a learning machine. It's not, we're not just typical AI. We've been doing this for a long time. And we're getting the results that people want to see. And we can do that certainly for you. Why spend a lot of time something you don't even know what you're checking? Let's be brutally honest here. So why not use the experts to do that for you? But use the technology as, again, what's from there. Where we see the reds at the moment, so we're seeing origin documentation, scrutiny. Again, that's not just here in the UK, that's all over the world. That's in each country. Europe's no different, UK, US, it's no different. There's a lot of challenges within that. Customs valuation due to exposure risk, again, making sure, if you're saving money, and I've just made a point here, excuse me, a 2% duty difference on a 2 million import for equals to 40,000 per year exposure. If you think you're paying zero, but you actually should be paying 2%, that could have waited to 3 to 4 years. That could be 160 grand on your bottom line that you haven't worked out. So again, or you haven't planned for. So again, it's making sure you understand your customs valuation. Correctly apply the transition value methods, your CIF charges, your valuation charges, if you're doing intercompany, how you're working on that. So very much we see that as a high risk. Again, commodity classification, again, we've been doing a lot of classification. We're starting to understand what clients need, and we give it in a much more detailed report. That gives them the answers. We did one recently, and I'll show you on here when we get to the end. What we're seeing in the Department of Business and Trade, export support expanding, market diversification. Personally, export support really is a frustrating area for me because I always feel it's given to the wrong people. That's just a personal. I don't think people who get this funding use it correctly, and we don't see anything really expanding. But we put it as a green because they're trying desperately to do some diversification. GCC, Indian Pacific, African corridor. These are the key areas you see. Priority markets, international opportunities live across the DBT. But again, very hard to deal with the DBT. But hopefully you're getting some sense when you're going through them. Again, recommended actions. We're supporting Department of Transport. So, here's a big plug for them. Again, because we see as agreed, because there are funding and things available to you. So we want you to get that funding and see if it's worth it for you. Again, logistics and border intelligence. Ongoing border process change are impacting UK trade flows. Lead times extending. So again, we're seeing that lead time up. Got that Christmas coming soon where containers are all starting to be planned. Again, lead times is going to play a significant part. Are you going to bring it earlier? Then you've got more cost because it's sitting in a warehouse while you're waiting. Then what happens if the market starts to change? You don't have a lot of flexibility. So again, some challenges there. Again, like I've said, the planning critical. Geopolitical fate shifts again. What happens if something happens in that meantime? And like I said, you get it in early, or do you wait and see if things start to happen again? What we've seen. So we've set that more as an amber. Got a fog in my throat today. I don't know why. Again, I think it's because I do too much talking. My mum said I could talk a glass eye to sleep, so I'll work that one out. Sorry. We always should have a bit of humour, shouldn't we? Keep pressure points, port congestion, vessel capacity, border processing, and geopolitical routing. So again, geopolitical routing, we're seeing that. So again, some key points there. Freight intelligence dashboard is telling us some difference there where we're seeing the estimate. You're seeing some increases as you see across the chart. Again, Shanghai, and I put some rates in there: Shanghai, Rotterdam, Shanghai, Genoa, Shanghai, London. And I don't just keep it to the UK. I try and make it so, because a lot of people do cross trade. So again, that's a key area to think about. Again, what we're seeing mainly correct. So when we did some commodities for a lot of clients, and what we're seeing in that correct classified. So out of all the ones we've done so far, probably about 1,000, we're seeing about 70% correctly classified, which is a good plus point. Further investigation, we saw about 20%. That's not saying that it was a challenge. What we're saying is it's not as detailed as we would expect it to be. So again, have a look at that and change it. And then we saw around 10%, which we couldn't really match. And they're using them codes. So again, why using them codes? Give us some more details of how you've got to that code. So again, that 10% equated, so possibly around a 30 to 40,000 pound cost to somebody. So again, that's what we're seeing. That's what we can do in our trade intelligence. We know the market. Again, what's our market intelligence telling us? So we did a commodity code, we did a market intelligence. GCC is still coming out quite strong. We saw France, Canada, and Far East as an amber. We saw some opportunities we're seeing in the corridors. So again, most common risk areas identified was again origin and valuation and classification, only because of the 30% we saw when we were doing classification for clients. So again, we can do your classification, send them over. Let's have a look at it. Let's give you a detailed report under our trade intelligence. Again, I just put that the cost of getting duty wrong, valuation, it's a big cost over 5 years, £200,000 that you haven't planned for. So again, it's just the key areas to think about. week ahead, we're going to be watching G7, so update on that, freight developments. We're going to do a bit more deep dive into the UK-Japan announcements on Friday, customs enforcement, commodity pricing. That's what we're seeing, and that's what we're going to be covering. So again, our Silk Road is out there. So again, the history of the trade podcast. If you want to watch anything on the Silk Road, I enjoy doing these podcasts, and we've got a new one coming out this Sunday. Then we've got the Silk Road, and if you want to look at the Italian one on everything around there on what happened many years ago with the Roman Empire, how the Roman Empire, we feel, built the first infrastructure in the supply chain. So again, I had to think then, when you get that mind freeze, I'm thinking it's Rome. So again, so we all have long days. And again, that's what we're covering. So again, join us next week. Hopefully you enjoy this. I've tried to condense it a little bit more and a bit more, so and a bit quicker, so you can get that context. And we've also put it on an email structure as well, just to help a lot of people. So again, thanks for watching. We look forward to joining you on Friday. And again, please enjoy, please comment, or please subscribe. That's all we ask. It's building nicely, but again, we'd like some more. So thanks very much.